So now we are going to backtest our strategy number 12, that is algo setup 1 on the previous day charts. But before we are backtesting this particular strategy, I am going to show you how to plot our two indicators, that is linear regression candle. This is the first indicator which we are going to use, and second indicator is UT bot alerts. These are the two indicators which we are going to use in our trading with software, and I am going to show you how to plot these indicators. But before moving into that, one information which I forgot to give you regarding this linear regression candle is that it will generate its own chart. It will generate its own chart. Suppose if I want to backtest this particular strategy in a stock called as Reliance Industries. Okay, if I want to backtest this particular strategy on a stock called as Reliance Industries, first of all, Reliance Industry is going to have its own chart, right? It is going to have its own chart. After I am selecting this indicator on Reliance Industries, now this linear regression candle will generate its own chart of Reliance Industries. So basically now Reliance is going to have two charts, combination of two charts. First of Reliance Industries itself, and second a chart which is being generated by linear regression candle. So there will be mingling of two charts. At that time what we have to do, we have to hide the chart of Reliance Industries, and then we will select the chart of linear regression candle. Okay, so what I mean to say is that linear regression candle will generate its own chart. At that time we have to hide the chart of that particular stock or at that or that particular index. Okay, I know you're confused right now. Don't worry, I'm going to backtest this particular strategy right now. But before that, let us plot this indicator, and then you will understand the concept very clearly. So let us go to the charts right now. Let us select this indicator section and type linear regression candle. Okay, let us type linear regression candle first. This linear regression candles by Ugurvu is the indicator which we are going to use. So let us select this indicator. Now say there is mingling of two charts. Okay, first is of Nifty Bank itself, and this linear regression candle has generated its own chart of Nifty Bank. So what we are going to do, we are going to hide this Nifty Bank chart. Okay, so let us go to the setting of Nifty Bank. Okay, let us go to the setting of Nifty Bank and we will hide this particular chart of Nifty Bank. Now you can see the chart very clearly, right? This linear regression candle has generated its own chart of Nifty Bank itself. Okay, so this is what we are going to do. We are going to hide the chart of whether we are backtesting on stocks or whether we are backtesting on commodities. Whatever segment we are backtesting, we are going to hide the chart of that segment, and we will keep the chart of linear regression candle only. Okay, so what are the settings which needs to be made? Let us go to the setting of linear regression candle first. Here in signal smoothing, the setting is 11. We are going to change the setting to 7. Okay, we are changing the setting from 11 to 7. We are going to change the style. See, here this plot, in this plot the color is white. We are going to thicken this line. Okay, so let us thicken this line and let us give OK. So this is the only setting which needs to be done. What setting which we have changed? We have went to the input section. In signal smoothing it was 11. We have changed it to 7, and we have thickened this line of plot. Okay, we have thickened this line of plot. So this white line, as I have told you earlier, this white line is the linear regression line. This white line is the linear regression line. Okay, now we are going to plot the second indicator. Let us go to the indicator section and let us type UT bot alerts. Okay, let us type UT bot alerts by Quant Nomad. We are going to select this indicator. After selecting this indicator, we are going to change the setting of this indicator also. So let us go to the setting right now and let us change the key value and ATR period, which is very important. The key value should be 2 instead of 1. We are going to change the setting into 2, and ATR period instead of 10 we are going to use 1. Okay, so these are the key settings which needs to be followed. What is the key? What is the setting? Key value we have changed it to key value we have changed it into 2, and ATR period we have changed into 1. Okay, and then we are going to give it OK. Now can you see it has this UT bot alert has already given us the signal of buying and selling. Okay, in live market also you can see this signal. Okay, you will see that this UT bot alert will generate this signal of buying and selling, and as I told you, we need to patiently wait for this signal first. Okay, so after we get a signal from this UT bot alerts, we have to see that the candle should be above or below this linear regression line. So let us see the buying condition first. See, UT bot alert has given us a buying signal, and when we are going to enter, only when the candle is above this linear regression line. Okay, we can see here that this candle went above this linear regression line. This particular candle, this green candle would have been our entry candle. This green candle would have been our entry candle, right? So we have seen the buying side first. Now let us see the selling side. See, we patiently wait for the signal from UT bot alerts. Here we can see the signal of selling here. We are going to enter only when the candle is below this linear regression line. And here we can see this candle, this particular candle has closed below this linear regression line. This particular candle would have been our entry candle. Okay, in short, the candle which breaks the high or low of this candle, which is closing above or below this linear regression line, we are going to enter at that particular candle, right? I hope you understood. See, here we got a signal of buy. Okay, we got an automatic signal of buying from UT bot alerts. We will patiently wait for the candle to close above this linear regression line. This candle has closed above this linear regression line. We are going to enter only on the candle which breaks the high of this candle. So this green candle would have been our entry candle. This green candle would have been our entry candle, right? So I hope you understood how we are going to take our trade using this particular setup, which comprises of two indicators, that is linear regression candle and UT bot alerts. I told you that this linear regression candle has its own chart. It will generate its own chart. So after plotting this particular indicator, that is linear regression candle, we need to hide our main chart. Whether we are trading on stocks, whether we are trading on index, whether we are trading on commodities, or whether we are trading on currencies, we will hide that segment and we will keep our linear regression candles chart only. Okay, so the combination of these two indicators, that is linear regression candles and UT bot alerts, generate very powerful signals. And I hope you understood the criterias. What are the criterias? We need to wait for the signal from UT bot alerts, and once we get the signal from UT bot alerts, we need to see that the price should be above this linear regression line or below this linear regression line. Okay, and I hope you understood what settings we have changed in linear regression candle and UT bot alerts. So now we are going to backtest this particular strategy, and let us see whether we are getting very powerful buying or selling signals from this particular setup. So let us backtest this particular strategy now. See the chart on 24th of July, and I am going to show you where to keep the stop loss when you are entering a trade and where should be your target. Or in short, when to exit from your position. I am going to teach you that. Here we can see this condition here. Here we can see that we got a selling signal from UT bot alerts, which is our criteria number 1. We need to wait for the buying or selling signal from UT bot alerts. We got the signal of selling. Then we have to see that the candle should be closing or should be below this this linear regression line. And we can see here that this candle, this red candle, is below this linear regression line after we got a selling signal, right? This candle has closed below this linear regression line after we got a selling signal. We are going to enter only on the candle which breaks the low of this candle, right? The candle which has closed below this linear regression line, when its low is broken, then and only then we are going to enter. Here we can see that the very next candle was able to do so, right? This candle has broken the low of the previous candle, so this is going to be our entry candle, right? This is going to be our entry candle. Now where to keep the stop loss? We will keep the stop loss at the high of this candle. We are going to keep the stop loss at the high of the candle which has closed above or below this regression line, right? Here in this condition, we can see very clearly that we got a selling signal and the candle has closed below this regression line. Am I right? The candle has closed below this regression line. We have to keep the stop loss at the high of this candle. We have to keep the stop loss at the high of this candle, and you strictly needs to follow the stop loss. That is, if your stop loss gets hit, you have to quickly exit your position. That is very important. Why? Because preserving your capital is very much important. So where to keep the stop loss? We have to keep the stop loss at the high or low of the candle which is closing below this regression line. Okay, and when to exit our position. And we can see here very clearly that after we have entered at this candle, this particular trade has went very well into our favor. It has given us a very good profit. When to exit our position? If we are taking a selling side, we have to exit on the candle which has closed above this linear regression line. So at this candle, we could have exited our position. This would have been our exit position, right? We have to exit immediately on the candle which has closed above this linear regression line. That is going to be our target. Okay, we will patiently wait for the candle to close above this linear regression line if we are taking a selling position. Same way, if we are taking a buying position, we will exit our position when the candle closes below this linear regression line. This is going to be our target. Okay, and where to keep the stop loss, that is very important. If we are taking a selling side, we are going to keep our stop loss at the high of the candle which has closed below this linear regression line. Okay, if we are taking a buying position, we will keep the stop loss at the low of the candle which is closing above this linear regression line. This is very important. Okay, this is going to be our stop loss. The low of the candle which closes above this linear regression line is going to be our stop loss. So I hope you understood where to keep the stop loss and where we are going to exit our position in this particular example. And we can see here that after we got a selling signal from UT bot alerts, we got a very good trade. We could have easily achieved our target. Where to exit? We will exit on the candle which is closing above this linear regression line. This is very important. It is very important for you that you follow this particular criteria. Where to exit? If we are taking a selling position, we will exit on the candle which closes above this linear regression line. Okay, so I hope you understood this example, and let us consider another example now. Now consider an example of a company called as Reliance Industries and see the chart on 7th of August. Okay, see the chart on 7th of August. See this condition over here. See the condition over here. Okay, here we can see that UT bot alert has given us a buying signal. We are going to buy only when the candle is above this linear regression line, right? After we got a buying signal, we can see that that particular candle was above this linear regression line, right? When we got a buying signal, we can see that this candle was above this linear regression line. We are going to enter only when the high of this candle is broken, right? And we can see clearly here that this particular candle was able to do so. This would have been our entry candle. This would have been our entry candle. Now I am going to ask you this question: where will you keep the stop loss and where is going to be your target? Our stop loss is going to be the low of this candle. Our stop loss is going to be the low of the candle which has closed above this linear regression line, right? So this is the candle which has closed above this linear regression line once we got this buying signal. So according to our criteria, what we have to do? We have to wait for the buy or sell signal which is being generated by UT bot alerts. Once we got that signal, we have to see at that time whether the candle is above or below this linear regression line. If the candle is not above that linear regression line, we will wait patiently for the candle to close above that linear regression line. We can see here that once we got the signal, immediately at that time, the candle has closed above this linear regression line, right? We are going to enter only on the candle which breaks the high of this candle. So this candle is going to be our entry candle. And where to keep the stop loss? As I told you, the candle's low. This candle's low is going to be our stop loss. Why? Because this candle has closed above this linear regression line. Okay, so I hope you understood where to keep the stop loss, where when to exit our position. We will exit when the price comes below this linear regression line. Okay, and we can see here that this red candle has closed below this linear regression line. All the previous red candle, no matter they have came inside this came below this line, but their closing was above this linear regression line. But this particular red candle has closed below this linear regression line. So we will exit our position with our profits. Same way, if you have missed this opportunity, here you got a selling signal from UT bot alerts, right? This candle has closed below this linear regression line, and this would have been our entry candle. Why this is our entry candle? Because it has broken the low of this candle, which has closed below this line. I hope you are understanding what I am trying to say, and I hope you are seeing the chart very clearly. Let me zoom this chart. See, here we got the signal of sell signal from UT bot alerts. Okay, this candle has closed below this linear regression line, right? This candle has closed below this linear regression line. Where is going to be our entry? Our entry is going to be at the candle which breaks the low of this candle. Okay, so this candle is going to be our entry candle. Where is going to be our stop loss? Our stop loss is going to be at the high of this candle. This is going to be our stop loss. Why this is going to be our stop loss? Because this candle has closed below this linear regression line when we got a signal from UT bot alerts. Okay, so this is going to be our stop loss. When we are going to exit our position? We are going to exit our position on our selling side when a candle closes above this linear regression line. Am I right? So once we entered our position, we are going to exit at this particular candle. Why this is going to be our exit candle? Because this particular candle, that is this green candle, has closed above this linear regression line. Okay, so I hope you understood this example, and let us see another example now. Now consider an example of index market, that is Nifty 50 index, and see the chart on 7th of August. Here we can see that we got a signal from UT bot alerts regarding selling. Okay, so first we got a signal from UT bot alerts regarding selling. Then what we have to do? We have to wait for the candle to close below this linear regression line, right? And we can see here that this red candle was able to close below this linear regression line once we got a signal from UT bot alerts. Okay, so both the condition has been met. We got a signal from UT bot alerts, and the candle has closed below this linear regression line. We are going to enter only on the candle which breaks the low of this candle. Because this candle has closed below this linear regression line, we are going to enter only on the candle which breaks the low of this candle. So somewhere around this candle would have been our entry candle. This red candle would have been our entry candle, right? Where to keep the stop loss? We will keep the stop loss at the high of the candle which has closed below this linear regression line. So this is going to be, or the high of this candle is going to be our stop loss, and strictly follow the stop loss. That is, if the price hits your stop loss, exit immediately. If the price hits your stop loss, exit immediately. So the high of the candle which closes below this linear regression line is going to be your stop loss. Remember that, okay? And where to exit our position? We can see here the moment we have entered our position, it has given a decent move. We could have easily achieved our target. But according to this strategy, when we are going to exit our position, we are going to exit only on the candle which closes above this linear regression line. Okay, here we can see that this doji candle, this red doji candle, has closed above this linear regression line. Okay, so this candle would have been our exit candle. This candle would have been our exit candle, and we can see that we could have exited in a profit only, because this would have been our entry point, right? This would have been our entry point, and this candle here would have been our exit. So we could have exited with profit only. Okay, so I hope you understood how we are going to exit our position and where to keep our stop loss. Here again we can see that we got a buying position. we got a buying signal from UT bot alerts, and at that time the green candle has closed above this linear regression line. So both the condition has been met. When we are going to enter our position, the candle which breaks the high of the candle which has closed above this linear regression line is going to be our entry candle. So this candle is going to be our entry candle. Why? Because it has broken the high of the previous candle which has closed above this linear regression line. Okay, so this is going to be our entry position. This is going to be our entry position. So where we are going to keep our stop loss now? We are going to keep the stop loss at the low of this candle. We are going to keep the stop loss at the low of this candle. Why? Because this candle has closed above this linear regression line, and strictly follow your stop loss. When we are going to exit our position, we are going to exit only on the candle which has closed below this linear regression line. We can see here the candle came below this regression line, but it has not closed below this regression line. Okay, in this particular scenario we can see that the candle or the price came below this regression line, but it has not closed below this regression line. But here we can see at this particular candle, at this particular red candle, it has closed below this regression line. Okay, so this particular candle would have been our exit candle. This particular candle would have been our exit candle. This is our entry point. Okay, this is our entry point. We can see very clearly that we would have exited with a very good amount of profit. We could have exited with a very good amount of profit. So this is how we have to trade using this particular strategy, which has the combination of two indicators, that is linear regression candles. That is the first indicator which we are going to use, and second indicator is UT bot alerts. Patiently wait for the signal from UT bot alerts, which will generate a signal of buying and selling. Once we get a buying and selling signal, patiently wait for the price which is closing above or below this linear regression line. So these two conditions has to be met in order to take a trade from this particular strategy. Okay, and according to my backtesting, this strategy generates a lots of trading signals. Okay, it will generate a lots of trading signal on buying and on selling, but make sure that our condition has to be met. Some of them gives very good trade and some of them hits our stop loss, no doubt about it. Some trade will generate very good amount of profit, and some trade will hit our stop loss. And strictly keep your stop loss where we need to keep. Okay, we will keep our stop loss at the high or low of the candle which has closed above or below the regression line. Okay, this is where we have to keep our stop loss, and exit also according to our criteria only. This strategy works well only in trending market. If the price is having a direction on the upside, or if the price is having a direction on the downside, at that particular time only this strategy works very well. In short, the market needs to be trending. If the market is trending, you can expect that this strategy is going to give you very good trading signals. But if the market is in sideways means if the market is just stuck in a range, at that time also this particular strategy is going to give you lots of trading signal, but most of the time it is going to hit your stop loss. It is going to hit your stop loss. Accuracy has been very good for this particular strategy, no doubt about it, but remember that our criteria has to be fulfilled. We need to wait for the buying or selling signal, and that time the candle has to close above or below the linear regression line. That is our criteria. You need to keep your stop loss strictly when you are entering a position, and at the same time exit your position also according to our criteria. Okay, stop loss has to be kept mandatorily when you are entering a position, and exit our position or exit your position according to our criteria only. Okay, so I hope you understood this particular strategy, and considering the simplicity of this strategy and considering the accuracy of the backtesting results, my rating for this particular strategy is 7 out of 10. My rating for this particular strategy is 7 out of 10. And remember, the indicators which we have used is only available on TradingView software. Nowhere else you can find those two indicators. You will only find those two indicators on TradingView software. Okay, so in the next lecture, we are going to discuss our strategy number 13, which is also a algo trading setup. I hope you understood this particular strategy. Backtest this particular strategy before using this on live market. Backtest the strategy, calculate the accuracy, and then and only then use this particular strategy on live market. Okay, so see you all in the next lecture. Take care, everyone.